The Federal Reserve is about to pump the crypto markets and stock markets. That's right, you heard that right. We're about to take off because the Federal Reserve, the United States Federal Reserve, is about to print money again and take off. But you're crazy, Pablo. People would say you're crazy because the Federal Reserve is not even cutting interest rates because they're worried about inflation. They're worried about Trump's tariffs, right, lifting up inflation. So why would the Federal Reserve ever print money? That's what QT is, right? That's what QE is. You're saying, right, the Federal Reserve is about to stop and end QT, bringing QE to print money, right? And that will lift up, we all know that will lift up the stock market, but dream on, buddy, that's not going to happen, right? That's the logic that most people have. I'm here to say that I personally think that the Federal Reserve will print money and it's going to lift up the stock market and the crypto market, right? But I'm not saying this is going to be a 3-year bull run. I'm thinking we could probably top this year, but I'll explain to you the logic I'm using of why the Federal Reserve could actually be about to print money. Even though it looks like right now they're worried about inflation, they're not even cutting interest rates. But I am probably crazy enough to tell you that they're gonna end QT, which is quantitative tightening. That signals they're about to start doing QE, which is quantitative easing, in the coming weeks. How and why? I'll explain it to you guys. First, let's have an update on Bitcoin. Okay, so Bitcoin, basically, as I was telling my Discord, if you guys, in my Discord, you get this video first, that we're looking for a bounce to about here, 94, maybe even wick down to 93K, right? Something like this, and bounce. Basically, you know, when Bitcoin hit like 100K here, on the jobs data a few hours ago, I said, look, we're still probably going to pull back to 93, 94K, then bounce. That looks like it's happening. On ETH, just quickly, very shortly, let's do ETH, Ethereum here. And yeah, it's, in my view, that is still a bull flag. A bull flag, something like this. And it's, let me do that on a lower time frame chart so we can see it more clearly. So here we go. Now there's two ways to do a bull flag here, right? One is to see, that's the midline of my bull flag. It could be just a tight, right, bull flag like this, right? Or if we get a news shock, it can actually move down into this range and create this much bigger bull flag. It's obviously better if we have ETH moving a tight range here, downwards slightly here in this, right, bull flag or downward channel, and then break out. But I can't rule out a news shock, some sort of shock event, and it comes down here. Something like a wick to 23, mid 2300s, and then up. If not, then this area around, let's say just below 2500, high 2400s, we probably bottom there and go up. Right now, yes, technically the situation doesn't look good because ETH has closed for 2 days in a row below this long-term supporting trend line, and that's not good. Usually, as a technical trader, you would say then the trend line is broken. So if I put that on a weekly, we can see it better. So we can see now the trend line that supported Ethereum in this entire bull run has now been broken with 2 days of close. We could wait for the weekend to see if we get a weekend close to around 2800, right? A weekly bar here. That would save the situation. Right now, I think everyone, everyone who trades knows that this has been broken, right? This trend line has been broken for 2 days. And, the exchanges, in my view, the exchanges could just use this as a trap. The way they do this is they basically get everyone to short. See, everyone's short here. The green, so much green shows that everyone is short. When it's red, means there are more longs than shorts. And they'll probably wick it down one more time on ETH, get suck even more shorts in the short term, and then boom, up it goes. So I personally think ETH probably get to 3,500, 3,600. That's a basic target for me. And then 4,100 and then 5,500. Those we can do later if we get through this phase first, if we defend that trend line first. So that's my thinking on ETH, not financial advice. Nothing I say here is financial advice. And but before we go on to explain why the Federal Reserve is about to pump some money. That's just answered the question of which crypto exchange does Pablo use? Well, Pablo uses a crypto exchange that's non-KYC. That means they don't ask for your ID. That means all your information stays private. That means the IRS, the tax office, the CIA, FBI, nobody knows it's you, right? And they have all these great prizes just for signing up to $5,500 just for signing up, but only on this link that I'm providing you with, the Pablo link. Basically, it's in the description below. If you are on YouTube, it's in the description below. Just click that link, and that's where it'll get you those great prizes. If you're on another platform watching this, for example, Instagram, well, there is my Stan link. Go to my homepage. There's my Stan link. We click on there, and there we go. In the Stan link, the first thing that pops up is a Bitunix because this is a big deal. Okay, only on Pablo's link. Let's get back to Ethereum and why the crypto markets are about to pump. So, even though this is very controversial, I don't know if anyone else out there is saying this. The reason why I like what the Federal Reserve is going to do is because of this chart. This chart. This is everything. What is this? It's called overnight reverse repo repurchase agreements, Treasury securities. It's what's commonly referred to as the reverse repos. What is reverse repos, and how come it didn't exist before with only a little spike here, and it existed starting from about early March 2021, right? Didn't really even exist before. Well, it was around, it was just very, very tiny. See, this is billions of dollars on the side. Even this little pop here is only like $237 billion. And then you had 4 billion, 1 billion, whatever. Okay. The reverse repos is essentially when, you remember during COVID, what happened was during COVID, the Federal Reserve did QE. This is what I'm talking about. They printed a lot of money and sent crypto flying, sent stocks flying. When they did QE, the banks got a lot of that money, liquidity, from the Federal Reserve, because the Fed was buying those bonds, the banks were selling those bonds, so a lot of those money or liquidity got into the banks. And the banks couldn't lend out all that money because the economy hasn't recovered yet. There wasn't a lot of people demanding loans or mortgages from those banks. So that money just sitting idly in the banks, sloshing around. The Federal Reserve said, well, we have a way to handle that. So what they did is they created something, forget the technical name, I wouldn't go into details explaining what a reverse repo is, but essentially the Federal Reserve just said, put your extra money with us. Why would banks do that? Well, they offer something like 0.05% or 5 pips, 5 points higher interest than what the banks would get in the interbank lending market. So it's a little bit more attractive, but for billions of dollars, that's if you get 5 pips higher, 0.05% higher, that's attractive. So all that money goes in and parks it in the reverse repo account. So look at this. The market had something like $2 trillion. These are billions. So at its peak, something right here, that was $2.5 trillion, right? 2000, you can see 2,500 billion is $2.5 trillion. And then basically they had to take this out, take this out, take this out, take this out, and they're about to run out of money. What do banks do? Why is this going down? Right? We know this was COVID money. This was COVID money coming in. The banks had nowhere else to put it. So the Federal Reserve made them put into this facility called reverse repos. But why is it going down? Well, it's going down because the Federal Reserve and the US government asked these banks to buy and purchase US government bonds. And the yields are very high lately. It's like 4.5% just for parking your money with Uncle Sam. So the banks say, we'll take our money out of the reverse repo account and we'll park it in something like a 10-year bond. And we guaranteed 4.5% interest yield for the next 10 years. And that's what they've been doing. And that's why those $2 trillion has been drawing down. We're almost down to zero now. Like it's around like 80 billion, but that's nothing. That could go in like a day or a week, right? So what happens is this. Are they going to buy more bonds? The key question is, are they going to buy more bonds? Oh boy, have I got a chart to show you. Check this out. This is basically how much the United States government is financing for the next few years. Goes all the way up to 2035, but we're only concerned with 2025. They need to finance 9.1, that's a trillion, right? 9 million is 9 trillion. $9 trillion. And most of that, like $7 trillion of which happens in first half of 2025. So between now and June, United States government needs to sell $7 trillion of bonds because it matures and it needs to be refinanced. If they can't sell that, then US government just cannot function anymore. I know that Elon Musk is doing Doge, which is government efficiency, which is cutting costs, but even if he succeeds with that, at least at most he cuts 1 trillion? That's their target, right? Cut 1 trillion. But they still need to finance that 9 trillion. 7 trillion just in the next 5 months. $7 trillion. How much is that? That's 1/4 of US GDP. US GDP is only like 27 trillion. So 7 trillion is like 1/4 of US GDP. They need to sell that much bonds in the next few months. And so the banks, who else is going to buy it, right? It's only going to be the banks buying it, US insurance companies and banks. The other buyers like China, like Saudi Arabia, who have lots of US dollars from exporting oil or exporting, electrical goods or whatever to the USA, they earn a lot of US dollars. They're not buying. How do we know that? Well, look at gold price. Gold price is shooting through the roof right now. Who's buying that? Not Americans. It's the Chinese and the Saudis. Maybe the Japanese are buying that, right? So these foreigners are not that likely to buy. The only foreigners who buy are the EU, European Union guys, right? The very loyal European Union guys are still buying US Treasury bonds plus, but mainly it's going to be the US banks and the US insurance system. So when they buy, they're going to say, well, where do I have savings? Check my pockets. I had 2 trillion in the reverse repo account before. Now I don't have that. Banks can't buy either. Once the banks can't buy, then the Federal Reserve is going to have to step in. They're going to have to stop QT. What's QT? QE is quantitative easing. That's what we saw in 2020 during COVID when they were printing money, right? And you saw the money supply go up like this. QT is the opposite of that. They're doing quantitative tightening, which means the Federal Reserve is selling bonds, selling treasury bonds, right? Because they hold a lot of treasury bonds as well, because they bought in 2020. Remember, during COVID, they bought a lot, and now they're selling them. They're selling them they give you the bonds, and banks give you the money. So they take the money back from the market to try to control inflation, right? Okay, now imagine this. In the next 5 months, US government refinances or sells $7 trillion worth of bonds. And the Federal Reserve is also selling bonds. And the bank's got no money to buy, because I just showed you the pocketbook of a lot of these banks. It's running empty now. So then the bond market crashes and yields spike to like 8%, 10%, 15% on US treasuries, 10-year treasuries, which would be a crazy situation. That should never happen. If that happened, then financial system of the entire world would collapse. I'm not sure even any one country survives. Not even China, I don't think. Maybe Russia, because Russia has been shut off purposely by the United States, sanctioned, firewall sanctioned. So Russia is basically like a hermit kingdom, surviving on its own, just trading with China and Iran. That's all Russia's doing right now. Ironically, they might be the only one to survive. But the point is, US Federal Reserve, US government, US Federal Reserve is not going to let that happen. Not going to let that happen. Their mandate is to facilitate the smooth functioning of the US financial markets. They need to step in and hold up this market, right? How are they going to step in? Well, one thing they could do is stop selling bonds. If the US government is selling so much, $7 trillion worth of bonds in the next 5 months, like we just told you, then Federal Reserve has to stop selling. If it stops selling bonds, what's that called? That means they stop QT. They stop QT, quantitative tightening, is the first step before they start QE. They may not start QE for another few months or even a year from now, but they're going to stop QT. And once they stop QT, I believe that'll be the time when crypto, especially the altcoins, really take off, because this signals that QE is coming, and that's extremely bullish for altcoins, and we saw that in 2020. So Nasdaq, the tech stocks will probably take off as well. I'm thinking a blow off top. So let's keep a close eye on this situation. On when even though nobody's expecting the Fed to end QT, I am probably one of the few people out there, maybe 1% of the market out there, who is crazy enough to put out a theory like this. So I'll give you guys more updates as we go along. Okay, thank you for tuning in. I'll catch you guys next episode.